We're here now with Kim Anderson, our grain marketing specialist. Kim, wheat harvest is pretty much out of Oklahoma and well into Kansas. So what does this mean for the pressure on wheat prices?
Well, there's some strange things going on in the market right now. Now back to the harvest, we've cleared Oklahoma, Texas Panhandle, well into Kansas. We got a relatively good idea of what's going to happen to the hard red winter wheat harvest, but we got a lot left to get in the bin. So we don't know about harvest pressure there. You look at the world, what's going on there. Normally June 1, we've got about 25% of the world's 24 calendar year harvest done. We get another 17 or 20% in June. So that puts us relatively close to that 45% done level. So we got a lot of wheat to harvest around the world. You look at Russia, there's some strange things going on there. We started out at 3.4 billion back in January, February. Saw a report this week that has it down to 2.9 billion bushels. You look at the U.S. WASDE report for June, had it at a little over 3 billion, so there's some uncertainty with that Russian crop, and a Russian crop at 2.9's got to give us some help on wheat prices. You look at the stocks to use ratio, United States, right at average. You look at the world, for the 5th year in a row right now, the stocks to use ratio for the world is projected to be lower. So those strange things keep happening, like India, they're harvesting a record crop, or they've harvested a record crop, and they say we've got a supply problem with wheat. That's a little strange there. You look at Norway, they say we're going to start building stocks because we're concerned about the war, we're concerned about disease, so we're going to increase our stocks. Is it, harvest pressure over? Probably not, but I think there's a good possibility we could see higher prices.
So what can we expect to see with wheat prices?
Well, you look at prices. We came in June 1 around 665. We'd peaked out at 685 in mid-May. June 1, 665. End of June, we're down around 535. So they went down. Average harvest price for Oklahoma, $5.85. That's June, July, and August since 2009. Average that. If you'll take our high price, $6.65, subtract $1.85. That's the average range in prices in that 15-year period. You get $4.85 on the bottom. If you take our lowest price, $5.35, and add $1.80 to it, you're getting lost in these numbers here. That gives us $7.20. So it gives us a range of prices, $4.85 to $7.20. June averaged $5.80. So we could easily see prices coming up with the stocks to use ratio and with a short Russian crop. I think that could happen, but if I'm selling wheat, I'm going to have a mechanical strategy and I'm just going to move it in the market over time.
Yeah. Moving into summer crops, what are your predictions for corn and soybeans?
We just look and see what's being offered for forward contract for corn, around $4.25. The average for your harvest price for corn is about $4.80. It's been up to $4.75. You look at the stocks to use ratios for corn, U.S. well above average, world well above average, so you'd expect below average corn prices. So that $4.25 may be a little low. There's a crop planting report that came out this week. I have to see what the market thinks of the corn acres and the bean acres to see what's happening there. Look at soybeans. You can forward contract now around $10.35. You go back earlier in the year, it's $11.55. Stocks to use ratio, U.S. well above average, the world above average, so you'd expect below average price. Maybe not as low as $10.35, but somewhere in that range.
And what about cotton?
Cotton, we picked up 3 or 4 cents on cotton this week after talking about how negative it was last week. That ice is up around 74 cents. You look at the average price for cotton on that ice is 70, 75 to 78, somewhere in that range. Look at the stocks to use ratios, U.S. well above average, but the world average to below average, right at average. So you'd expect cotton prices to be in this 70 to 80 range.
All right, Kim, thanks for the updates. We'll see you next week.